Hello everyone, welcome to this episode of Your Life, Your Money. As we speak, year after year, the NRI numbers are rising. More and more people come out of India, pursue their career in different parts of the world, and their numbers are rising. Another trend which is visible is every year the number of people who are coming back to India is also on the rise. If you're an NRI who have worked for many years outside of India and planning to retire and come back in next 10 to 12 years, this video is for you. There are many things you need to be doing right now, not wait till you come back to India, but the preparation should begin right now. Stay till the end of the video as I take you through the various aspects on which you need to focus and prepare yourself. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Number one, check your preparedness to retire or to come back. You intend to come back, reason could be many. You have served sufficient number of years, it's time for you to come back as a retired person, or you have lost a job, or your family could be thinking that it's enough of time outside of India, we need to come back, or you could have gone outside of India for a short duration and it's time for you to come back. Anything could be possible. If you're somebody who is planning to come back to India permanently in next 10 to 12 years, points I'm going to discuss here is applicable to you. If you are somebody who knows such persons, please do share this video. Before I commence, a sincere request to all of you. Please do subscribe to this channel. You watch, forget to subscribe to the channel. Our growth depends on your subscription. Please do hit that subscription button and press the bell icon. The first point for you to focus right now is check your preparedness to return. Yes, the time when you're going to come back to India is right in front of you. It could be 10 years, it could be 2 years, it could be a couple of months, or it could be next month. Check your preparedness. What's the preparedness? You should look at it. Number one, do you have sufficient money to come back, retire, and not work again? If you do not have sufficient enough money, you should contemplate from where will you get the money. Do you have to pursue one more employment? Do you have to pursue something like a consultancy? Work on something which improves your cash flow. How do you know whether you have enough money to retire, enough money to sustain yourself in India? We had done a video earlier by name, how do you say you are ready to retire? You can watch this video which is there on our channel and could be guided based on the points that I have discussed over there. The second point for you to prepare is check your health insurance. You could be covered by your employer when you are in Middle East or some other country. But once you come back to India, India is not cheap when it comes to question of health insurance. Gone are those days of health insurance being cheap or the health expenses being cheap. Today, you must have a health insurance through and through your life. Check your health insurance. If you already have one, check do you have sufficient enough sum assured. If you have 2 lakh, 3 lakh, 5 lakh sum assured, it's time for you to increase it, right? If you are coming back to India within next 2 years, if you don't have a health insurance, please buy that health insurance right now. If you are coming back to India after 7, 8, 10 years, the check that you have to do is what's your health status. If you are fit and fine, you have no problems whatsoever, then in that case, you can wait for a while and buy a health insurance 2 to 3 years before you come back to India. Who knows what will happen in the next 10 years? You are worried, you could be above 50 and I'm fit and fine now. It's a natural sequence that when you get older, something or the other thing could come in the form of a health problem. The best way to handle such a situation is buy a health insurance plan which has a top-up cover. That means you don't cover the initial part of the health insurance. Let's say that you have a top-up plan for 25 lakh and you say, I will not cover the first 5 lakh. Wherein which, when you have this top-up cover, you are covering the larger problem, leaving out the smaller problem. If your health insurance bills is less than 5 lakh, you can manage on your own, or you can take it for a chance that when I come back to India, I will buy a health insurance at that time. And if there were to be major issues which require larger payments for hospital, that can be covered by top-up. So if you are coming back to India in next 10 years, my suggestion is don't even wait. At least have a top-up insurance, and 2 to 3 years before you come back, get a regular health insurance to cover that gap of that 0 to 5 lakh what we just now spoke about. The third preparation you should look at is, do you have a house of your own? Many people have got their house, but is that the place you come back and stay in India? Are you going to retire in that place? Or you have an intention to live in some other city? If you have in Delhi NCR region a property, but your intention is to go and live in Indore, then you need a house in Indore. You should think about where is that you are going to go, come and settle down. Do you have a house of your own? If you are working and you're still not certain about retirement, you're just 35, 40 years, you can bypass this question. You can wait. Once you come back, you'll be working here and you can take time. But if you're coming back, getting retired or not working anymore, then this housing issue becomes very important. If you have a house in the city where you want to come and settle down, that's perfectly fine. If you don't have one, then you should plan about how do I go about it. There's another problem that comes many times. You purchased a house early in your career, but by the time you retire, the house is 10, 15, 20 years old. A question comes is, you have upgraded your life, you have moved up the ladder, you will not feel like going and staying in that old house, or it may require repair. Think about it. What do you intend to do it? If you don't want to go and stay there, it's time for you to hunt for a new house. At least 3 to 4 years before you come back, plan around it. And you want to go and stay in a contemporary place. If you are well-to-do financially, money is not an issue, then it's obvious that you spend your golden years in a place of your choice, a type of house where you want to live. You could be looking for various facilities nearby, hospitals, schools, marketplace, your friends, golf, whatever it is, walking tracks. So think about it. Do you have all that? How do you plan for that? Don't come back and think around it, because your money, what you have, how much money you will use to buy this house. If you already have a property somewhere and you swap that property, you sell that property, buy this new property, it saves you the tax as well as reduces your budget that is required for the house. That's perfect. But if you're coming back anytime in next 10, 12 years, thinking about the housing should start right now. The next preparation is unfinished responsibility of your children. These days, marriages are getting delayed. Probably you could have married very late and your children could be still dependent on you. So plan what happens to your children. What is the stage of education they are going through? By the time you come back, have they finished their responsibility? Are they independent? Are there any money that you have to set aside to meet the requirements of your children? If you don't think about it and provide for it, then you think, I have got so many crores of rupees, and suddenly from nowhere this children's expense come up. It can completely derail your finances. So create a budget for that, keep it on the sideline, and make sure that that will not derail your retirement life. Plan well your cash flows once you come back to India. What I mean to say is, whether you come back and retire permanently here, or you come back and still you are very young and you might take up an alternate employment or whatever it is, you should be crystal clear about your cash flow from that point till the day you retire. How will the money come? And don't make mental maths. Don't think that, oh, I have got 3 crores in the bank and bank gives me 7% interest rate. So 7% into 3, I will get 21 lakhs. See, when you depend on these kind of mental maths, what can happen is, say today you are getting 7%. What's the guarantee 10 years later you get the same return? The obvious answer could be lesser. Likewise, the taxes can bring down that amount to a great extent. The max tax in India today is around 39%. Imagine whatever the interest you get and you have to pay a big chunk of money, your calculations may go haywire. Likewise, the price rise in the next 10 years can also be a problematic thing. So you have to get your calculations very right. If you know how to do it yourself. If not, take the professional help. But by the time you come back, you should have clear answers about what is going to be my cash flow. What is going to be my cash flow post payment of taxes? Is it sufficient? It is not sufficient. What could be the risk you are going through? This preparation should be done right now. Point number 2, consolidate and simplify. It's obvious that 10 years later, when you come back, or whenever you come back from now till the day you come back, you're much older. You get exhausted mentally, physically. It's a natural sequence that happens in life. It's equally natural that you would have got into a lot of things during your early working years, a parcel of land over there, a few insurance policies there, some investment at some investment elsewhere. So it's all cumbersome. It's time for you to consolidate. If you don't need something, better sell it off and bring it into one pool of money. If you don't remember something, you sell them off and bring it. Consolidation and simplification is the must before you retire or before you come back to India. It makes your life very, very simple. Let's say that you leave behind 10 plants in the country where you are working and you come back to India. You don't know how to handle it. God forbid if something happens to you, will your children, will your wife be in a position to handle these investments? It makes sense for you to consolidate all these things. If there are things which you can close down, please close them down and move it to India or wherever you want to keep it, in one place, two places, depending on where your comfort is. But consolidation and simplification is the need of the hour, and the preparation should start now. Point number 3. Be mindful of the risks you go through when you come back to India permanently. What are the risks you will likely to go? Number 1, taxation risk. If you are living in Middle East, all these Middle East countries do not have income tax. You are habituated to earning some money, using that 100% of the money for your consumption purpose. Whatever you save it and keep it someplace. Things will change when you come back to India. The NRI FDs you have built till now are tax-free. The day you land in India, they become the resident fixed deposits. Whether you declare or whether you don't declare. As per the Income Tax Act, if you are holding an NRI FD even without closing them, then it becomes taxable. Think about it. You got 7%, and let's say you got 10 crore FD, you got 70 lakhs, and you enjoyed all the 70 lakhs when you were working in Middle East. But once you come back to India, you could be taxed minimum 33%. That means what you thought as 70 lakhs interest income for you is reduced by 33%. I took the example of a 10 crore. Not many people have that kind of a money. Most people have a fraction of that money. Even you too need to pay taxes. So the amount of money which will be available for you will be reduced by the amount of taxes you pass through. So tax planning becomes very, very important. Tax is a big risk when you come back and live in India. You need to be preparing for how will you manage taxes. Managing taxes is how do I use the instrument which will have zero taxes? How will I use the instrument which will have reduced tax percentage? How do I use the instrument which will have a deferred taxation? Negation of tax, reduction of tax, deferment of taxes are the 3 strategies you can adopt to manage your taxation. Then which other tax you will go through? You will go through inflation risks. When you come back and live in India, inflation is moderate compared to the decades of past of India. However, inflation is real. Whether you have got 3% inflation, 4% inflation, inflation is inflation, and inflation will eat into your purchasing power. You need to be doing something to see that your cash flows are not hampered badly because of inflation risk. So you need to be building your mutual fund portfolios, you need to be having your stock market instruments, you need to be having those instruments which will participate in the stock market. Likewise, rentals could be another good thing, but rentals is not for everyone. So you have instruments like fractional commercial real estate which can help you tide over that issue of inflation, because rents you get from fractional commercial real estate are more or less inflation proof. Real estate itself is inflation proof. When the prices go up, the rents go up. When the rents go up, the property prices will go up. So that's the other risk you will go through. The other risk you will definitely go through is the risk of falling interest rate. Not many people understand this. See, India had a 14% interest rate. Gradually it came down, and right now we are at about 6.5%. It will not remain here. It will come down. As India progresses further, India becomes more and more developed. Obviously, the future interest India will go through will be much lower than today, which means you're calculating your cash flow depending on the interest you're getting today, but you could be up for a root shock 10 years down the line when the interest rate fall down. You need to be doing something to make sure that you are not badly impacted by the falling interest rate. So these are the risks you might go through. The risk of inflation, the risk of falling interest rate, the risk of taxation. A great amount of work that needs to be done to come out of these risks or manage these risks. Dear viewers, we are mindful of the magnitude of problems for the returning NRIs, and countless of people have sent us requests to initiate consultations for returning NRIs. We have been thinking all the time, and the good news for you is NRI Money Clinic now has in its product suite returning NRI consultation. Of course, it's not made available for everyone for the sheer volume that comes in. But if you find people suitable for that and people really need to go through a returning NRI consultation, we are very happy to help returning NRIs manage their finances. If anyone has a requirement to consult us to make the required preparations before you come back to India, you can reach out to us on the numbers that are given in our description box below there. We have also provided there a link for WhatsApp. Click on the link and just write returning NRI consultation, and our team of experts are ever ready to help you to prepare your arrival to India well ahead of time. Why delay? Send that message now. Point number 4, taxation rules you must be familiar with. What happens? What are the tax rules you need to comply with? Number 1, all these years as an NRI, you did not pay any taxes on NRE fixed deposit, or the monies that you have kept in your NRE account did not suffer any taxation. But once you come back to India, from the day you land in India, the monies that have kept in NRE and NRO as usual, both will become taxable. Even if you maintain an NRE FD without converting that into a resident FD, as per the income tax rules, you are holding these NRE FDs against the FEMA law. Hence, that interest that you derive from these NRE FDs will become taxable. Therefore, you have an obligation to convert them into a resident FD as soon as you come back within the next 3 months or so. Likewise, if you want to save the taxes, there is one way out for you. You can maintain FCNR deposit. FCNR deposit, otherwise known as foreign currency non-resident deposits, are tax-free during your RNOR phase. While the NRE FDs become taxable in India once you come back to India, FCNR will continue to remain tax-free for the period of RNOR. RNOR period is known as resident, not ordinarily resident. This is approximately a 2-year cooling off period given to NRIs who qualify for certain criteria that you can come back, you can wind up your activities outside, come back. During this particular period, your foreign currency assets like FCNR or your overseas assets like your properties, etc. will not get taxed in India. So check what is your eligibility for RNOR. If you have lived outside of India for 3 years and come back and say that I am in RNOR first, that's not the way it will work. So there are guidelines which are clearly given who can get RNOR benefits and to what extent you can get that. Again, all these videos are available on our NRI Money Clinic. Go to the playlist called NRI Taxation, pick up the topic you want, and all these have been put there to guide you, and these videos have been done by competent chartered accountants. So check whether you are eligible for RNOR benefits. Likewise, if you are proactive, and if you have done certain investments via Gift City in Gujarat, government has given certain tax break, and using the Gift City investments, you can make your retirement cash flows completely tax free. But there are few conditions you have to comply with. For the length of the video, I cannot get into all these things fully here, but we have done videos also on the Gift City there. We continue to do the Gift City videos for you through and through this particular year. But if you talk to your financial planner, there are instruments which are available which can make your investments completely tax-free for your rest of life, and you can create cash flow during your retirement phase. So time to act for all this is now. One other point you should know from a taxation perspective is when you are an NRI, your overseas assets, be it the properties, be it your bank accounts, be it your international mutual funds or anything, will not be taxable in India. However, once you come back, and once you complete your RNOR phase, if you are eligible for it, then all these things will become overseas investments of a resident Indian, which means they will become taxable in India. Meaning you have to declare all these things, you have to compute your income from that, and you are liable to pay taxes on this. Of course, there is double tax avoidance agreement. If you have paid certain taxes in the country where you resided, let's say you are in US, you have paid some taxes in US, now you are in India, you are taxable in India. So there is under double tax avoidance agreement, certain benefits are given to you. Point to note here is all the overseas assets that you have acquired, if you are still retaining, when you come back and stay back in India, they will also become taxable in India. Point number 5. Plan your exit from the country as per your benefit. For example, you are planning to come back to India in the month of September. But suppose if you come in the month of October, for this year, you would have lived outside of India for 182 days, which means when you file your tax return next year, for the current financial year, which is 25-26, you will be treated as an NRI. And let me assume that you are eligible for a 2 years of RNOR phase, then your RNOR phase begins from next financial year. However, if you come in the month of September itself, you have not spent more than 182 days outside of India. Therefore, this financial year will not be treated as non-resident. You will be treated as a resident Indian. And your RNOR phase, if you are eligible, starts from this year itself, which means you might lose 1 year of benefit. So time your entry back into India to the extent possible by talking to your employer or planning things well in advance. Likewise, some people have planned to come back to India. They are not mindful of the number of years and other things. Check when will your RNOR benefits will start coming to you. Let's say that you have stayed back outside of India for 7 years and the RNOR phase, let's say, is made available for you from 8th year. You have to check it with the relevant year when you are trying to come back. The rules and regulations, what is there today, may or may not hold good. Government may change the rules and regulations going forward. So any example I give you here, don't take it's with the face value or the exact number what I am speaking here. I'm just taking the random number here. Let's say you're planning to come back 7 years from now, whereas your RNOR phase starts from 8th year from now. Probably if you hold back for 1 more year, then you might be eligible for 2 years of RNOR period, which means a lot of taxes can be saved for you. So be mindful of the year in which you come, the period of year in which you come from. Likewise, also check from your host country where you are currently staying. Are there any special benefits for you by staying for a couple of more years or a couple of more days or a couple of more months before you return back to India? Look at your tax status in the host country. Are there any benefits that you may gain or lose by not planning for your exit from that particular country? So be mindful the month of coming here, the year of coming, and your host country rules, which will give you many tax benefits if you plan very well. Point number 6, check your compliance obligations. Compliance obligations are must do things when you get out of a country or when you come back to India. For example, if you could be living in Canada or if you could be living in US, check whether there is any exit tax you have to pay. Check what penalties you have to pay on 401ks. Check when you can withdraw. You may not be a US citizen, but if you have certain number of points in their social security, are you eligible for any social security benefit? Don't assume things. Get in a call with the CPA over there. Write down all the questions for which you need answers upon. Ask what benefits you get, what compliance requirement you need to complete, what is the intimation that you have to give. All these things you have to make sure. Likewise, once you come back to India, you have 2 compliance obligations. Number 1, you have to close your NRI, NRO accounts. It's an obligation by way of FEMA law. You can't keep it during the RNOR phase, you must close. If you have an NRI FD, it need not be closed, but its categorization should be changed from NRI FD to a resident FD. Many of the bank branches themselves will not know about it. They may not guide you. But if you get an opinion which is contrary to what I am telling you here, the best way is don't challenge the bankers. Ask them to write to the NRI cell, which is the specialized cell maintained by each and every bank, which knows the NRI rules and regulation, and they'll give you an official answer. The staff in the bank may not know the rules and regulations correctly. But when you write to the NRI cell or you ask the staff to write to the NRI cell, they will correctly guide you on that. Another compliance requirement for you is once you come back, you need to declare each and everything that you have overseas should be declared to the income tax department. The assets you are holding, your retirement benefits, your properties you are getting there, the rentals that you have, investments you have made, all these things have to be declared to the income tax once you leave in India. Do not neglect them. Just don't file the tax return. At the time of filing the tax return, make sure that you declare all these things. So the best way for you is talk to the competent chartered accountant who is very familiar with the NRI affairs, and they will guide you the right way. What assets have to be declared. Our channel has that video. Which assets have to be declared in India from an income tax point of view. You can refer that video also. Point number 7. If you already know a chartered accountant who is competent enough with the NRI affairs, consult them. If you do not have one, this is the time you build a relationship with a chartered accountant who is conversant with NRI affairs. Either when you come back to India or via an online mode or through email, whatever it is, consult them. Ask them all the things that you need to do. If you have not filed tax returns till now, better you start filing the tax return. If you don't have any income to declare in India, file a nil tax return. Make sure that you build your database correctly in the income tax department so that nobody will ask you any of the questions. One other thing that I will tell you is try to take the bank statements of all the years of your functioning as an NRI and preserve it as a document either in your mail folders or in some secure folders. Once you come back to India as a resident Indian, you might receive some income tax query. At that point of time, it may not be possible for you to collect all these bank documents. As a part of housekeeping, collect all these bank documents like your annual statement, your loan account statement, the personal loan statement, whatever that is there. Don't discard them, but keep it. It may come handy. Point number 8 is you must have a relationship going on with a competent financial planner. This should start as quickly as today in case if you don't have one. If you already have, if you're happy with them, continue with them. Ask them what all the things that you can do. Ask them how you can position your investment to minimize your tax incidence, right? If you don't have one, as I said, you can make best use of our services also. I have already told you how you can reach to us. Simple, send that WhatsApp message on the number that is given in the description box. Our team of experts are ready to help you. So dear viewers, if you attend to all these points what I have spoken in this video and prepare well ahead of time, I can be very confidently telling you, you can have a good life in India when you come back without worrying, without complaining about India is a bad country and things are very bad. Your preparation helps for your comfort when you come back home. Hope this video what I have done helped you to understand points you need to focus. If yes, do give me a thumbs up. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Again, requesting you to subscribe for the channel, hit the subscribe button, press the bell icon. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another useful topic on your life, your money. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.